Should you use CPF to invest in stock, or should you just leave your money in CPF to collect the 2.5% interest in your ordinary account? So in this video, I'm going to tell you two key considerations to help you with the decision. Hi, I'm Alvin, the founder of Dr. Wealth, and let's begin. So let's run through some statistics, right? For those members who invest their CPF money, all right, how well they've been doing in the past 2 years. So CPF board has compiled that results, and this is what it is. So we compare to the base rate of 2.5% in ordinary account. 49% of the CPF members who invested in money were able to get a return that's higher than 2.5%. Okay, in this period from October 14 to September 21/6. And 22% of the members was able to achieve more than 0% but less than 2.5%. That means they made money but not as good as the 2.5% in the CPF ordinary account. And then lastly, these 29% of the members actually lost money, right? Less than 0%. So in other words, the chances of underperforming the 2.5% is as good as 51% of the members. And of course, this is only just 2 years, right? As time goes by, the data will be a lot more credible because the market move up and down. We might catch a good year or a bad year that cause the percentages to skew. But let's err on the safe side, which means it's not easy to outperform that 2.5% as most people think that it is easy, but it isn't. So let's go to that two considerations that I wanted to share with you. So number one, ask yourself, do you need your CPF money within the next 5 years? For example, if you want to buy a house with your spouse in the next 3 years, right, and then you found that you have this CPF money idling around in the ordinary account, and you're thinking of achieving higher returns so that you can have more stash at the end of the day for all your other needs. So you're thinking of investing in stocks, but that's not advisable because, as we know, stock market is very volatile. What if you invested in stock and eventually a market crash happened before the 3-year mark where you need to pay for the house, and your investment might just halve easily during a market crash? And that can compromise the ability of your financial to buy this house. So try not to use the CPF money to invest in stocks when you have near-term needs for this CPF money. So that's consideration number one. And let's say you pass consideration number one and say that, oh, I have no use for this money for the next 5 years. Should I invest? Then the next question that you should ask yourself is, have you made money from stocks using your cash to invest? So in other words, I'm an advocate that you should always use your cash to invest in stocks first and not touch your CPF money. This is because for CPF ordinary account, there's a 2.5% interest every year. So which means the opportunity cost is higher. If you don't do well enough, you actually lose out to this 2.5%. Whereas when you use cash, and let's say on an ordinary savings account, not those hurdle accounts, bonus accounts, you get probably a 0.05% interest. So which means your cash is a lot idling a lot more than the money that's in CPF because of the interest difference. So that's why it always makes sense to invest your spare cash and not touch your CPF ordinary account. And only after you are quite savvy with stock investment with your cash account and you feel that you can achieve that outperformance of 2.5%, then you should consider using CPF money to invest in stocks. Alright, so I hope today this video you have learned about these two considerations, whether to invest your CPF money in stocks, and it should help you make a better decision going forward. Thank you for watching.